About filing your tax return this year because the annual tax season has opened for individual taxpayers. You've got until the 23rd of October to get the job done. And in our Life Hack segment today, we want to help answer some of your questions about what's involved in filing. If you've got a specific query, you can call us on 021 446 0567 or send a WhatsApp to 072 567 1567. With us on the line is Reinert van Rensburg, who is an attorney and tax practitioner at the Leap Group. Reinert, thanks for joining us. Welcome.
Hi, Pippa. Thank you for having me again, and good afternoon to the listeners.
Reinert, it might sound like a silly question, but I always get listener queries about who does and doesn't have to submit a tax return. Should we start there?
Yes, we can start there. So, in my personal opinion, always important to submit a tax return, notwithstanding your circumstances, because there are certain circumstances that you do not need to submit a tax return. If you're below the tax threshold, or if you received income from one employer and your taxable income is less than 500,000 Rand and you did not receive any other income, in general, you do not need to submit the tax return. But if that's your situation, and with the latest auto assessments by SARS, you might have been auto assessed in any case. So there's no need to submit the return if all the information is accurate and correct. But if you haven't been auto-assessed, always important to submit the tax return for two reasons. So it's just to make sure that it's declared to SARS that you did not receive any income, or if you did receive a little amount of income, that it's in any case declared to SARS, or if SARS received any third-party information available to them, you can confirm whether it's accurate and correct. And the only way to do that is to submit a tax return.
And SARS have been quite stiff about imposing penalties of late, haven't they? They've really, I believe, knuckled down and are being a little bit less lenient around those who didn't submit when they should have.
No, definitely. So in terms of admin penalties, with our clients specifically, we've seen it being implemented on a more frequent basis. Yeah. Looking back, it's 2017, 2018 return that's been flagged by SARS this year. And then they levy a penalty for the non-submission thereof on a monthly basis. And these penalties can be quite hefty based on your taxable income. And can be levied up to 35 months if the penalty is correctly applied by SARS.
Okay, so you skip this process at your peril is the bottom line. Reinert, you mentioned the auto-assessment, and I've seen a couple of people grumbling about the auto-assessment process and saying it all happened so quickly, I don't feel like I had a chance to interrogate it or dispute it. It just was all wrapped up before I even knew it had started. Won't you explain what auto-assessment is all about?
Yeah, so as we talked in our previous discussion regarding technology and SARS streamlining the process, we've really seen more taxpayers being auto-assessed. Taxpayers were auto-assessed from the 1st of July until the 7th of July based on third-party information available to SARS. So these are type of taxpayers whose tax affairs are less complicated. Yeah. So if you're a normal employee receiving employment income for which you pay as you earn, and you only have retirement annuity contributions or medical aid contributions or even received pension income, all those are reflected on tax certificates, which is provided to SARS by employers, by financial institutions, and by fund administrators. So SARS uses that information to pre-populate your tax return. And then if you're selected for auto-assessments, then SARS automatically raises an assessment based on the information that was declared to them. But this can be a risky business because you get taxpayers who, for example, received rental income, or most specifically also taxpayers who received foreign income. And as a tax resident, you are subject to tax in South Africa on your worldwide income. So it's important to then edit your return that was auto-assessed to declare that income and to declare that foreign income as well, if it's applicable. So it's not just good to, SARS auto-assessed me, I'm happy, they don't know about anything, I'm just going to leave it as is. And that's a risky approach to take. So it's very important to include income that you did receive that's not reflected on the return. And then further, for example, deductions that need to be applied manually. If you look at home office deductions, that's been a topic of discussion for the past few years. SARS won't include that in the auto assessment. So as the taxpayer, you need to utilize that to your advantage to claim the home office expenses by editing your return that was auto assessed.
Thank you for that. Okay. Reinert, speaking of foreign income, Fiona's just messaged to say my son is about to take up a job teaching English as a foreign language in South Korea. Will he pay tax there or here or both? It's his first job, so he's not yet registered as a taxpayer.
Okay, so that we get a lot. A lot of young individuals are going straight out of school to go work in foreign countries.
Yeah.
You get the farmers going to work in America. You get the au pairs also working in America. And a lot we get is English teachers in China or Thailand. They definitely need to register for tax in South Africa, especially if they intend to return to South Africa. So, because that makes that they remain a tax resident while working in the foreign country. So how it would work is they'll primarily be taxed in the country where they are working, because in terms of employment income, it's sourced in the country where you are physically rendering your services, and that country has primary taxing rights on that income. Whether you're being paid by a South African employer or a foreign employer doesn't matter. It's always linked to where you are rendering the services. So you'll first pay tax in the foreign country, and the taxes paid will create a tax credit that can be applied in your tax return in South Africa to reduce, to nullify or minimize your tax liability here. And in addition to that, you also have the foreign exemption to your advantage. So, but there are certain requirements that need to be met. You need to meet the days requirements, and you need to be a full-time employee in terms of an employment contract in order to utilize the foreign exemption, which means that the first 1.25 million rand of your foreign income will then be tax exempt in South Africa, and you'll only pay tax on anything above that, but with the tax credits applied. So the approach that you can assume that you do not need to declare foreign income must not be taken, because SARS also this year specifically included additional boxes in tax returns to make provision for each situation, because you can receive foreign income while working for a South African employer or a foreign employer. The foreign exemption can apply or it cannot apply. So then SARS made provision for each type of situation that you need to declare your specific amount of foreign income received in that box. And then SARS will assess your return based on that.
Okay, thank you for that. And Fiona, good luck to him. I hope he has a wonderful time. Let's take a listen to a question that's come in as a voice note.
Afternoon, Pippa. I just wanted to ask a question about the tax. My husband passed away and I got a small cash inheritance from him. Now, how do I'm on e-filing, must I submit that amount I got from the estate? B. Tiger Valley. Thank you. Bye.
Thanks, B, and I'm so sorry for your loss. Reinert, what should B do?
Yes, so in terms of inheritance, it's not taxed in the hands of the taxpayer directly. It's taxed in the form of estate duty that's dealt with during the liquidation and distribution account. So based on the value of the estate, the estate itself will pay the taxes, okay, and then the amounts paid out to the beneficiaries won't necessarily be taxed in their hands. So there's nothing really to worry about there. It's only with the capital received, if start to invest that or buy property or whichever the case may be, once those assets are sold, it will create a tax liability.
Okay, thank you for that. Somebody asking, going back to the auto-assessment, how you're notified if you have been auto-assessed. Would a taxpayer be advised outside of e-filing, is the question? Yes, so
SARS can send out an email, or they can also send you an SMS. But the easiest way to take a look at whether you're auto-assessed is to go on e-filing. So whether you receive an SMS or an email or directly on e-filing, it's important to go view your auto-assessment and make sure that the information is correct. So in any case, you'll need to log onto your e-filing profile, make sure everything's in order, because you don't want to have that assessment raised and it's based on incorrect information, because the onus of proof is always on the taxpayer. So always log into your e-filing profile, make sure everything's in order, and then you'll know you'll be fine.
Okay. Another question from Anonymous on our WhatsApp line saying, how much of my mileage can I claim if I make the occasional visit to suppliers within the same city where I work? I don't have any kind of car allowance as part of my package.
So to claim travel allowances, you'll need to just have a logbook, and you need to differentiate between mileages traveled for business purposes and mileages traveled for personal purposes, and based on that you can claim a deduction for amount spent on traveling by your vehicle and specifically for business purposes. Personal trips cannot be claimed. So, for example, if you drive to work, even though it's to go to work, it's seen as a personal trip, and you cannot claim that.
Okay, thanks for clarifying that. One last one quickly from Jen in Cape Town. She says, I've been retired for 10 years on a small pension plus a SASSA pension. I received a non-compliance SMS from SARS last evening. How do I solve this problem?
So in terms of pension income, even though it can be a little amount, SARS can still flag specific returns. So if they flag the return, and we've seen that now recently, SARS goes back as far as 2007 to 2018 to flag returns, then you start to accumulate penalties on the return that's not submitted based on SARS flagging the return. So even though you're only receiving pension income and that's declared to SARS via the fund administrator, and they receive a tax certificate for that, if SARS flags return, you still need to submit the return. So that's specifically an example of a situation where if you took the approach to submit the return, even though you don't meet the requirements to submit the return, it won't cause a problem in the future. So to get back to it, it's always good to submit the return.
Yeah.
But based on the specific client, the non-compliance might be connected to a return that was flagged, and she'll need to make sure to submit the return as soon as possible, because the penalties can be levied on a monthly basis if SARS is starting to levy recurring penalties.
Okay. One last quick question, because it's easily answered, I think. Vernon says he was auto-assessed last year, but he hasn't heard anything from SARS again this year. Should he go ahead and e-file?
Yes, so if you were auto-assessed previously and you weren't selected for auto-assessment this year, you'll need to submit a manual return. It might be because I saw for some clients who in the previous year of assessment they worked for the full period of 12 months, but for example the 2023 year of assessment they only worked for 4 out of the 12 months. So there's a refund due to them, and it's not exactly the same as their previous year of assessment. So SARS did not auto-assess them again. So they want them to submit a manual return to declare the income they received, because SARS might suspect you received consulting income or alternative income than employment income due to only being employed for a few months of the year. So that's essentially an example of a case where you were auto-assessed previously but not this year. But keep the answer simple, most definitely, you need to go submit a manual return.
Reinert, thank you so much. You've got through a lot of ground in a short space of time. We really appreciate your input this afternoon, and all the best to you.